What's up everybody? Welcome to the Stocks channel. My name is Cory and this is going to be your daily stock market technical analysis update. We had a very interesting day in the stock market to say the least, and I'm sure you know what I'm talking about, and we still see the Nasdaq 100 continuing to lead the way. So first up, let's go ahead and take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Just a real quick update on the $1,000 account challenge, because I really haven't shown this in a while, is we are up 10.79% for the past month. And remember, I'm giving every single entry and exit for the trades that I make on this account right here on the Stocks channel Discord. So if you're interested in following along with the $1,000 account challenge, come check us out at the Stocks channel Discord, and you can find out how to join in the link in the description of this video. Now I will say this about the challenge, is this has definitely been a learning lesson for me, and it is very difficult trading with only $1,000 because a lot of the opportunities I want to take advantage of, I cannot afford with only $1,000. So this is still a learning process, and it's been a fun journey. And remember, the goal of this challenge is to see how much I can turn this $1,000 into by the end of the year. Alright, so jumping back over to the S&P 500, we did see the SPY ETF going down negative 0.16% today, and we did see a little bit of cooling off. However, the price action is still closing over top of the 5 EMA, and we still have this very strong bull trend, so there's really nothing to worry about, and it does look like the S&P 500 does want to continue to trend higher. You can see the SPY ETF is battling around this resistance level right around 384, and we're not getting decisive breaks and closes over that level and a continuation of the trend. However, as long as we're over the 5 EMA with a bullish trend, the price action is likely going to continue to drift higher week over week. So remember, the price target on the SPY ETF is still up here at 393, and I still fully expect to see SPY continue to head towards that level until we see something shift in the price action or the trend. Don't forget, we do have strong support at 381 and down here at 377, and you can see that that 20 simple moving average is starting to head higher, which is also a very strong support level. So there's still plenty of support below on the SPY ETF, and it does look like we're going to continue to trend higher with the current market conditions. Next up is the Nasdaq 100 QQQs ETF, and we see the QQQs going up 0.15% today and still hugging the top of that upper Bollinger Band, which shows that the price action is extremely bullish and that the Nasdaq 100 wants to continue to run higher. The price action is closing well over top of the 5 EMA, and you can see how strong this bullish trend is, with the 5 EMA creating a lot of separation from the other moving averages. We have a lot of big tech earnings reports coming out, and if they continue to beat and exceed expectations, I would not be surprised to see us get to our price target up here at 333 in a hurry. We're only a few dollars away from that target, and from today's close, we're only about 1.3% away from reaching that price target. Remember, this has been a price target for quite a while, and we just continue to head higher, blasting through price target after price target. And that's to be expected, because that's what happens in bull markets. We have a strong bullish trend and strong bullish price action, which means the stock market is likely to continue to head higher. There should be strong support on the Nasdaq 100 QQQs at 321, 319, and the gap close and the 20 simple moving average around 317. So just like with the S&P 500, there is a lot of support levels below this price action where we can drop to, find support, and continue in this bullish trend. Next up is the Dow Jones DJIA ETF, and we see the Dow Jones pretty much going nowhere today, but the price action still holding over top of the 13 EMA. We still have a bull trend, but it's very easy to see that the Dow Jones is by far the weakest of the three indices. The S&P 500 and the Nasdaq 100 continue to lead the way, and it's still showing signs that the tech sector is the biggest sector right now, leading the charge in this bull rally, which is to be expected. These big blue chip tech companies have always led the bull markets, and I don't see any reasons why that's going to change up now. Don't forget, the price target on the Dow Jones Industrial is up here at $312. Next up is the ARK-K ETF, and we see ARK-K getting crushed today, going down negative 3.3% and closing right on top of the 13 EMA. It does look like we're struggling to break through that price target at 149, which means we're not likely going to see the $155 price target until we break and close over 149. So the ARK-K ETF does have a bullish trend, so it could find support off of this level or the 20 simple moving average before it bounces and continues to head higher. As long as this trend is bullish and the price action is holding up above the 20 simple moving average, there's no reason to think that this trend is ending. We need to wait for the confirmation of that 5 EMA to cross below the 13 EMA before we see a trend reversal. Next up is the VIX, which is our fear indicator, and we see the VIX actually going down negative 0.73% today, even though the S&P 500 also went down today. That's usually a good sign that this selling is not going to last, because we're seeing fear leaving the market. Remember, in a low fear environment, we're likely to see the stock market continue to head higher to new all-time highs. As long as the VIX is staying below the 50 EMA and our resistance level at 24.8, I cannot see a stock market correction being the problem. The VIX would have to start breaking and closing above these resistance levels before the stock market could go into a correction. Next up is the US dollar, and we see the dollar continuing to show signs of weakness, and we are starting to see some signs of that short-term bull trend starting to reverse into a bear trend. The 5 EMA does look like it's getting ready to cross below the 13 EMA, but the price action is still trading over the 20 simple moving average. However, the long-term trend is still bearish with a negative sloping 50 EMA and the price action trading below that 50 EMA. So I'm still looking to see the dollar head to one leg lower down to the support level at $89. Remember, a weak dollar should be a strong stock market. Next up is gold, and we still see gold going absolutely nowhere, and gold's trying to decide if it wants to break back above 1861 or head back to support at 1826. If gold can break and close over 1861, it could head back up to 1930, but it could also equally just head back down towards support at 1826 and retest that support level before bouncing. If gold breaks below 1826, it could mean that we're heading down for another leg lower. Next up is silver, and we see silver still holding up over the 50 EMA, but really going absolutely nowhere and just trending sideways. As long as silver can hold up above $25, it does mean that it is likely slowly trending towards $26.56. A break and close over $26.56 means silver could be heading up to my price target at $28. Next up is Bitcoin, and Bitcoin is looking a lot like silver and gold, and it's really just going sideways, and it's holding up above the support level at $32,000. Bitcoin did break out of a consolidation wedge, and it does look like it's forming a new consolidation pattern below that consolidation wedge pattern. So Bitcoin is still going nowhere, and we still see low volume with no bullish trending. So there's no reason to believe that Bitcoin is going to start running anytime soon until we see some breaks of these resistance levels and some bullish trending building. Next up is Amazon stock, and it does look like Amazon stock had a pretty good day today, going up 0.98% and just barely breaking and closing above our resistance at 33.23. If we can see a follow through with Amazon tomorrow, that does mean that Amazon could start running because it's finally breaking out of this consolidation. You can look at these moving averages and see that we are developing some bullish trending. So with bullish price action and bullish trending, it could mean that Amazon is getting ready to run. Amazon has a lot of weight in the NASDAQ 100, so if it starts to run, it could pull the rest of the stock market higher with it. Next up is Apple stock, and we see Apple really going nowhere today, only going up 0.17%, and it's still trading outside of that upper Bollinger Band, which means it still needs to cool off and retrace a little bit. It is closing for 2 days in a row over my price target at $141. Which means that Apple's next price target that it wants to hit should be up here at $145. So it does look like Apple has more upside going into earnings, and it will have to do very well during earnings to continue to hold these price values. Apple usually has no problem beating earnings and raising guidance, so I would not be surprised to see Apple continue to run. Remember, Apple is a market moving stock. If it continues to head higher, the rest of the stock market should continue to head higher with it. On the financial sector, we're seeing the price action closing below the 20 simple moving average for 2 days in a row, and we are starting to develop some bearish trending in the short term. On the industrial sector, we continue to see weakness, and that is a price action close below the 50 EMA, which is never going to be a bullish sign. You can see the bearish trending is picking up momentum in the industrial sector, and it does look like industrials are getting ready to continue to sell off. On the healthcare sector, we're still closing over top of the 5 EMA with a very strong bull trend. So going back to the S&P 500, you can see that we still have a very strong tech sector as well as a very strong healthcare sector. However, we are seeing some cracks in the bullish armor in the industrials and in the financial sector. Normally with the S&P 500, you want to see all of the sectors moving bullish together, and right now we're seeing healthcare and tech continue to lead the way. That's okay in the short term, but in the long term, we will want to see the financials and the industrials join the bullish party. So there's definitely a warning with the financials and the industrials showing some weakness. However, it's too soon to say that they're going to drag the entire S&P 500 lower. This is definitely a tech dominant sector, and you can see that healthcare is also looking very good. We still see a low VIX with a weak dollar, which means we should still expect to see a strong stock market. So as long as the price action and the trend are bullish, we're going to remain objective right here on the stocks channel, and we are also going to remain bullish. So my price target on SPY remains up here at 393, and it does look like we're going to continue to trend towards that level. Don't forget to come check us out at the Stocks Channel Discord, where we are a profitable and disciplined trading community. You can find out how to join by clicking on the link in the description of this video. Thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.